Hello, this is Dr. Amrita Sahu, Associate Professor from the Department of Commerce, BSSS. Students, in the previous part, we have discussed about what is corporate accounting, what do you mean by company, what are the types of shares, what are the types of share capital, and various terminologies like right shares, sweat equity shares, etc. Today we are going to discuss about the procedure of issue of shares and the accounting entries. So, what is the procedure? First of all, the company issue the prospectus. Prospectus is a document in which all the information regarding the company is given from the profit and loss account to balance sheet of the company. Also, company mention the what are the types of shares and what are the number of shares company is going to issue to the public. After issuing the prospectus, company will receive the application on these prospectus, and then as per the applied shares, the company make an allotment of the shares, and then the company call the amount of shares on this. Generally, company call the whole amount of shares in the installment in the form of application money, in the form of allotment money, and in the form of various calls. Then what are the conditions of allotment? Here we are having the three condition actually. First one is the under subscription. What is under subscription? Under subscription is the situation when the company make the issue of the shares and they get the application less than the number of shares issued. So, this is the condition of under subscription. In that case, the company will issue the shares to the public, those who applied. Then we are having the next condition as the oversubscription. Oversubscription is the condition where the company issue the shares as per the pro rata basis, or pro rata means this is a proportionate way of distributing the shares to the public. This is a condition when the number of shares issued are less and application received are more than the shares issued. Then in this case, allotment of shares, in that case whenever the company is having the oversubscription of shares, then in that case letter of regret and the refund of money is given by the company. Means those who applied more, actually the number of shares are less and the application received is more. In that case the company is not going to issue all shares to all the public. So, in that situation company make a pro rata basis, that is proportional distribution of the shares to the public. So, first in that situation letter of regret and is given by the company to those public, those who are not getting any kind of shares, and also refund the money to the public. Then we are having next one is the letter of allotment. Letter of allotment to made to the those public, those who are getting the shares on the basis of their application. And next one is the letter of allotment and refund of money. Sometimes it may happens letter of allotment is given to the company, and then those who are not getting anything, then in that case situation the company is going to refund the money. Now, terms of issue of shares. There are two ways of issuing the shares, that is share issued at par and issued at premium. Issued at par means the shares are issued at a face value which is already given in the articles of the company, and second one is the issued at premium, means more than the face value. Suppose the value of share is rupees 10, this is a face value. If the company is going to issue these shares at rupees 12, so this is known as issued at a premium. This 2 rupee is the amount of premium. Then we are having at a discount, that is less than the face value. Less than the face value, suppose the value of share is 10 rupee and company is making a issue at rupees 8. So, 8 rupees, 2 rupees is a discount in this. So, this is a issued at discount, but now earlier it was the condition that company can issue these shares at a discount, but now this is prohibited. According to section 53 of the Companies Act 2013, no company can issue the shares at a discount now. Then we will start with the accounting entries. Accounting entries, as I told you, that the company issue the shares and call the money in the installment. So, this amount is called by the company in installment. So, first of all, company receive the application money when the company issue the prospectus. First step, the company issue the get the money in the form of application. Let's take an example of yours. When you take an admission in a college and when you purchase the prospectus, in that situation you are paying the application money along with the prospectus. So, this is the way. In the same way, the company will also receive this money in the form of application money. So, first of all, we have the first condition of receiving of application money. So, entry is bank account debit to share application account. So, bank account receiving is there. So, bank account is a real account. So, debit what comes in, and here the application and allotment money is going to be taken in the form of personal account. We have the rule debit the receiver and credit the giver. So, here giver is the form of application money. So, here we will write the bank account debit to application money. This is the first entry of receiving of application money. Once the company receive the application money, the company is going to transfer this amount in the share capital account, because this is the amount of money which is received by the company and this is going to be a part of the share capital. So, this is, and here the entry is going to be pass share application account debit to share capital. I am not giving any entry regarding the refund of money or adjustment of money, because we are going to discuss this point in the later stage. So, these are the simple entry first stage when the company is going to make an issue. So, first entry we have seen here bank account debit to share application account, and second entry we have seen share application account debit to share capital account, means transferring of application money to the share capital account. After that, we are having the next entry for due entry for the allotment money. Allotment made by the company to the public. In that case, company is going to receive the allotment money, and this allotment money, first of all, due amount we have to pass the entry. So, share allotment account debit to share capital, this is the entry for the due. And then when the company receive this amount, the receiving in this in the form of cash or bank. So, bank account debit to the share allotment account. This is the entry for the share allotment money when the company receive the amount. Suppose if we are having any kind of premium amount. So, in that situation we have the due entry share allotment account debit to share capital account to securities premium reserve account. Now, why we are saying security premium reserve? Because this is the amount, this is the entry where we are going to pass the amount of security premium reserve. Now, security premium reserve, we have to show this amount in the liability side under the reserves and surplus, where we have to put this amount as a security premium reserve, because this is a kind of reserve. Then receiving of allotment money, we have the entry similar what we have passed for the part, that is bank account debit to share allotment amount. After that, the company received the amount in the form of calls, whatever whatever the balance amount is there, that is going to be received by the company in the form of calls. This call can be first call, second call, or final call, whatever is there. So, always whatever the last call is there, we have to use the word final along with that. So, first entry we will pass here share first call account debit to share capital. This is a due entry for the share first call amount. And then we are having the second entry for receiving of the call money. So, here we will pass the entry bank account debit to share first call account. In the same manner, if we are having the second call, the second call is, suppose second call is the final call, then in that case we will pass the entry share second and final call account debit to share capital, and then we have to pass the receiving entry for the call, that is bank account debit to share second and final call. Now, with the help of an example, we will pass this same. So, take the example here. Larsen Limited Company issued 5,000 shares of ₹100 each at a premium of rupees 40 per share. So, here the total value of the share is 140. So, premium is 40 rupees. So, 100 rupees is the par value of the shares. So, share 40 per share payable as rupees 10 per share on application, 60 per share on allotment. 60 means 40 rupee of the premium and 20 rupee of the allotment money, including premium, and rupees 30 on the first call and 40 on the final call. Past journal entries in the books of Larsen Limited Company. So, we will start with the journal entries here. First one, we will pass the entry for the receiving of application money. So, here entry will be bank account debit to share application account. Bank account debit to share application account. The amount is 5,000 into 10 rupees, that is the amount of application money. So, amount will be 50,000 here. Now, this amount is going to be transferred to the share capital account. So, entry is share application debit to share capital account. So, here we will pass the whole amount 50,000 to the share capital. Next entry we have to pass along with the premium, because we are getting the amount of premium with the allotment. Most of the time if no information is given, then in that case always we have to consider the amount of premium with the allotment. So, here the entry is share allotment account debit to share capital account to security premium reserve account. Now, here we are having the entry where we have to pass the amount of premium also. This is a due entry for the allotment amount. Here we will pass share allotment account debit to share capital account to security premium. So, share allotment account debit will be debited with 5,000 into rupees 60, that means full amount, that is 20 for allotment plus 40 for the premium. Then we are having the next share capital. Share capital will be with the amount 5,000 into 20 rupees, which is a due amount for allotment, and security premium with the amount 5,000 into 40 rupees. Then we have to pass the entry for the receiving. So, here receiving entry will be bank account debit to share allotment account, and full amount of the amount with, that is the premium plus the allotment money, is to be passed here. Then we have the next entry for the first call due. Entry is share first call account debit to share capital account. Here the amount of first call is 30 rupees. So, here amount is share first call account debit with the amount 5,000 into 30 to share capital account. Receiving of the first call, we have to pass the entry bank account debit to share first call, that is 5,000 into 30. Then we are having the next entry for the final call. Final call is the last call. So, we have to pass this entry share second and final call account debit to share capital account. This is a due entry, and 40 rupees is the amount of due on second and final call. So, 5,000 into 40 we have to pass the entry, and next one is the bank account debit to share second and final call. This is the receiving of the second and final call, that is 5,000 into 40 rupees. Then next entry we have to pass for the journal entries for issue of shares other than the cash consideration. Means if we are having the vendor and we have purchased any kind of assets from the vendor, and in that situation the company is going to make an issue of share instead of making the payment in cash. On purchase of asset, we have the entry sundry assets account debit to vendor account. Again we are having the conditions of par and premium. So, when the company is going to issue the shares to the vendor, receiver is the vendor. So, vendor account debit to share capital account, whatever the number of shares company is going to be issued, the amount we have to write in the form of share capital account. In the same manner, sometimes the company may issue the shares to the vendor at a premium also. So, we have the entry vendor account debit to share capital account to security premium reserve account. Let us take an example. We will solve this entry here. Bihar Biscuit Limited purchased a machine worth rupees 8,36,000 from XYZ Limited. So, Bihar Biscuit is a purchasing company and XYZ is a vendor company, and issued preference shares of rupees 100 each, fully paid in satisfaction of purchase consideration. So, what entry will be made in case of such issue if in case of par and premium? So, I think you understand the question first. Bihar Biscuit is a purchasing company and XYZ is a vendor company. So, Bihar Biscuit company has received the machine from the XYZ company at a cost of 8,36,000, and against this 8,36,000 the Bihar Biscuit is going to give the shares to XYZ company at the rate of 100 rupees. This is a par value, and at a premium of 10%, 10% of 100 rupees is the 10 rupees. So, 110 is the total amount of premium. So, let us pass the journal entries. First entry for both the condition will be purchasing of the machine. So, we have the entry sundry assets account debit to vendor. So, here we have the entry machinery account debit to XYZ Limited with the total amount of 8,36,000. Then we are having the first condition when the company Bihar Biscuit is going to issue the shares at par. So, we have the entry here XYZ Limited debit to equity share capital account, that is 8,36,000. Here we have to find the number of shares. So, how we are going to find the number of shares? So, number of shares is equals to total value of the share divided by par value of the share. So, total value is 8,36,000 in this case at the par, and 100 rupees the par value. So, 8,36,000 divided by 100, you will get 8,360. This is a total number of shares and at the rate of 100. So, we will pass the entry here XYZ Limited debit to preference share capital account, that is 8,360 into 100. Next, the second condition is when the company is going to make the issue at a premium. So, here we have seen the entry. So, XYZ Limited is a vendor company who is going to receive this. So, entry is XYZ Limited debit to preference share capital account to security premium reserve account. In this case, how we are going to find out the number of shares? So, number of shares is equals to total amount payable. Total amount payable is 8,36,000 and total value per share. So, per share value in this case 100 rupee is the par value and 10% is the premium. So, 10% of 100 rupee is rupees 10. So, total value including premium is 100 plus 10, that is 110. So, 8,36,000 divided by 110, we are having the total number of share as 7,600. So, we have the entry here when the vendor is getting the shares at a premium, then we have the entry XYZ Limited debit with the full amount of 8,36,000, then to equity share capital with the amount 7,600 into 100, that is 7,60,000, to security premium reserve, that is 7,600 into 10, that is 76,000. So, for today we are going to close this topic. In the next topic we will discuss another journal entries related with the call in areas, call in advance. Till then, bye bye. Thank you.